This is your second opportunity of a lifetime in 4 years. You miss this, you miss out. You'll be chasing your tail all the way up, watching the memes go off, and wishing you had just listened to what the market is talking about at this stage. And of course, this is my opinion based on what I'm seeing in the charts. So hopefully you've come to enjoy the updates that I'm bringing you here almost daily for the last several years on the channel. You're joining me, Jason Pizzino, with your home of macro cycle analysis, covering Bitcoin, cryptocurrencies, the stock markets, and of course, the real estate cycle. Plenty to get through in today's video with our major second chance, or if you want to call it the second warning, before we see some pretty significant upside, at least in my opinion, based on my analysis. Now, links in the video description for our free crypto and economic report. This is coming out tomorrow. So if you want to get a copy of that with altcoin analysis as well, link is in the top of the video description. So where do we start from when it comes to the altcoin market and Bitcoin and this next stage? In the previous video, which I'll recap for you here, we're looking at timeframes leading into the second half of 2024 with potentially where these markets will eventually find some support and then start to make its way out of the trading range. So that is something that I went into in this video here. Rare signal hit, more bloody days for crypto. And yes, we've seen that happen over the last couple of weeks, as I pointed out in a couple of these videos here and also here back 9 days ago now, before it actually happened. But how did we get there? Where are we at? I want to have a look at the macro environment, the traditional markets, because we're still seeing these rise. And a theory that I brought to you several months ago was around the S&P 500 hitting new highs and how that affects Bitcoin. And of course, then how does that roll on to affect cryptocurrencies? So let's start with the interest rates. And the main thing that we continue to hear over and over again, or at least I do from my own analysis as I check the markets every single day, X, news, market sentiment, YouTube, all that sort of stuff, just looking at headlines, but then of course, just basing it on my own analysis, is that everyone is still trying to call the top. When the majority are still trying to call tops, you're not going to see a major top. At least that's what I've seen from my experience. And someone who I look up to and I interviewed on the channel, Jason Shapiro, has also talked about this in a recent video, which reminded me again to mention this. When we look at these sort of peaks, no one is thinking about the top at that point, or essentially the media and those mainstream analysts, but they're all thinking about the top on these moves up. They continue to call for a top over and over and over again, and it's no different this time round. And while that occurs, you're not going to see a significant top before a major collapse. And the reason for that is that not everyone is in the market, and you have to see all of that liquidity come into the market to get to a significant or like a major top in the market, which happens roughly every 20 odd years, 18 to 20 years, as you might know from our real estate cycle that we discuss in great length on the channel quite often. So in this particular case, to try and squash some of the bearish narratives that I hear out in the market, this one is about the Fed cutting interest rates. And in a previous video, I talked about my stance here on the interest rates, and I've gone over this many, many times, so I'll spare you this, essentially just looking at why interest rates weren't going to fall in 2024. And my shift of late over the last few days is that I don't see this as too crowded anymore, where the majority are thinking that it always has to cut. You're starting to get that little bit more of a balance where you're seeing some think it has to cut, some think it's going to pause. And in this next meeting, well, it looks like we're going to pause again for July, and then for September, you're starting to get this difference here of, again, a lot looking to get a cut, and you still got about a third of the market hoping or expecting a pause in interest rates. Now, the reason I bring this up is that in the past, even with a cut, it has not meant the market will collapse. So what I'm getting at here is with the narrative of an interest rate cut, therefore the market is expecting the market to fall over or roll over. That's what the analysts are thinking. Well, once the interest rate cuts start, that's it. You've got like this one here says, 60 days after the first Fed rate cut happens, the market will collapse. It may go down, but I don't see it collapsing based on many other signals that I've talked about on the channel earlier, which is why I suggest subscribing to the channel and liking it. I don't think I asked you to do that at the beginning, but please do. It helps out the algorithm and lets the algorithm know that you want to see more of the content. Okay, so in terms of the cuts, you can see here from the green dots, they've happened and the market has either paused, little correction here, but look at the rest of these. Interest rate cuts, market continues up. Interest rate cuts, market continues up. Interest rate cuts, well, we had COVID, but market continued up after that point, the 1980s, you name it. There's a period of time where the interest rates have been cut and the market has not gone down. And I have shown this on the channel as well throughout the 90s and the 2000s, where there were interest rate rises. That was a big thing a long time ago where the market had to collapse and it didn't. You get interest rate rises and the market continues up. You get interest rate cuts and the market continues up, as it did in the 90s and in the early 2000s. And then you get a period of pauses in interest rates and the market still goes up. Then you have periods where the interest rates get cut, come back up by get cut by a point, come back up by a point, pause for a bit, market continues up. The stock market continues up. So the main thing here is don't get caught up in the particular narrative that the market has to fall when the interest rates are cut. That's what I've seen from history as I've gone back to study it over several decades that we have with the data. If you choose to do the opposite, of course, everyone's free to do what they want. That's the beauty of the free market. So interest rates, we've covered that. Also seeing this sort of stuff come up quite often. At the bubble peaks, you don't see these big comparisons of why a stock must collapse. Now, in this case, we're looking at NVIDIA, which has gone parabolic. It's gone up a lot, 12,000% since 2016. And of course, just continues to rocket up with the stock markets continuing as well. But you don't see these sort of comparisons towards those peaks. You typically see more and more reasons why the market should keep going up, why it should keep going up and why it's different this time. And so what the comparisons are, at least what I've seen often, is why the comparisons are that it has to collapse. Maybe they'll be right, maybe they won't be. Eventually they will be right, but I think the timing is far too early. And as the old saying goes, even if you're right in the direction but too early, you're wrong. Think about that for a moment, especially when it comes to your money. If you think it's going to collapse and eventually you'll be right, but your timing is way off, well, you're wrong. You're wrong. We just have to face the music, and the market has more time to go up. Even this just made me laugh. The fear and greed index. So the market sentiment of the stock markets is at fear, 38. Previous close was at 43. It's been at neutral. If we take a look at the timeline here, you can see it's been bobbling around underneath 50, which is essentially the neutral period, and then down at these levels at fear. Barely, it didn't get to extreme fear, but it's been sitting underneath those levels in fear since roughly around April. So neutral to fear since April. That's 2 months now. And what has happened? It's gone up, and it hit a new all-time high last week, and it hit a new all-time high weekly close, daily close. If it keeps going this way over the next 10 days or so of trading days, you're probably going to see a new all-time high monthly close as well, breaking out of that previous correction there. So these typically aren't the signs that you would see near a top, a major top that is. Sure, market can come down, the market can go back up as it did through April and May and give you a trading range of 6 or 7%, and then it eventually found a new all-time high. You typically don't see a whole ton of fear at new all-time highs. So that has me laughing as well, especially with where we find ourselves in the 18-year cycle. We're in the winner's curse phase now, where things continue to go up. And I'm trying to figure out, why does this keep happening? Why is everyone trying to call another market correction? And for the life of me, I can't figure out why the masses keep trying to call it, besides trying to look correct. Basically just trying to be that hero that called the top in the market and then maybe get a movie made about them. I just don't know what else or why they keep doing it. I guess the other side to that is the reason why, depending on what they are selling, fear sells better. And I definitely see that with titles on the channel. And anytime I put anything bullish, doesn't get the same sort of response, but you can definitely get more eyeballs with bearish information or bearish data that continue to show how much the market needs to keep falling. Another theory, along with breadth that I've also seen this week, the Dow theory warning 2000, 1973, Dow Jones transportation. Yes, eventually if the transportation index starts to head down, the rest of the market will come down too. But it's just like this sort of data continues to miss the mark over and over again. And essentially what I've been doing is just fading this thing hard. Fade it hard for years, and it's been wrong for years of how much the market needs to come down over and over again. How concerned are investors? The leading economic indicator. No, these aren't the leading economic indicators. The leading economic indicator is, in fact, the market itself, because the market is going up and they're forward thinking. These are lagging indicators. And again, the easiest thing to do is just continue to fade this because the markets go up more often than not. Trying to pick tops that happen once every 5-10 years, and in the larger cases of the 18-year cycle, the major one happens every sort of 17 to 23 years. You're really just in a simple numbers game stacking the odds against you. However, what it does get you is a lot more subscribers. So I'm not going to go into that too much more because that starts to bring up some polarity and people get a little bit triggered about that. But the main thing I'll add to that is, or end on, is let's not get caught up in the economic data that continues to call or suggest making long-term theories about why the market should collapse every single year. Now, this one here was one that I looked at several months ago on the channel and had a theory around the S&P hitting new all-time highs, which begins to bring on that Bitcoin bull market. So a lot of people get really caught up on this and say, well, that wasn't a Bitcoin bull. We're already in all-time highs. This one here is the S&P 500 chart, and I'm looking at where Bitcoin had this accumulation underneath the old all-time high, whereas in this case, Bitcoin has gone and hit a new all-time high, but now sitting at roughly $66,000. So it's back underneath both all-time highs, so 2021 and 2024. And what happens here is that the S&P hits a new fresh high, it pauses or has a correction, as it did again this time. Bitcoin will pause or correct at that time as well, and it did. And then the S&P goes on for another move. It has a correction. Doesn't have to be a COVID correction. You can see even back here in 2015 into 2016, that was extreme fear at the time. But looking at the market, when you compare it there, relatively speaking, it wasn't the end of the world. You know, it had basically higher lows compared to other significant monthly lows at that time, pushed to a new all-time high. And that's basically where you got the major Bitcoin bull market starting. And of course, altcoins followed and you just had a mega run. So there it is there as it broke through. This is Bitcoin here. As it broke through its all-time high, went on a charge for about 11, 12 months, and then hit its final all-time high in December of 2017. And in that time, the S&P 500 went straight up. There was not even a swing in the chart. Basically did not do a lower low on a monthly trend in that entire period. And that was just straight up for Bitcoin, straight up for altcoins. In 2021 and end of 2020, which is essentially what I'm getting at with this video, looking at this second chance into the market, you see that again, it was almost straight up, a slight lower low on the monthly here, 3,725, 3,723, 2 points, like barely a swing. You had a swing towards the end and then another swing towards the end of the bull market and then the correction in 2022. So the takeout of that monthly swing bottom called the end of that particular charge. But this was another very clear charge. The accumulation areas for Bitcoin reflected on the S&P chart don't necessarily look too clear. So you can see there, you've got some monthly swings up, you've got a pretty significant correction, it attempts again, and then everything becomes a lot clearer. Here's the bear market, here is the accumulation, and you've got a few little swings here, pretty significant correction of 3 months in 2023. But again, this time, which is a little different to last time, and I don't mean to say this time is different, what we're seeing is that it's even clearer at this stage of the cycle, whereas in the previous times you had a few more swings in it. You can go back to the 2016 as cycle as well, and you can see the monthly swings in that accumulation period were not so clear also for the S&P. So the market was still undecided with which direction it wanted to take. And eventually it had the higher low form, and that was around the election time, November 2016. Boom, market takes off from that point. And basically the trends become a lot clearer. Whereas in this accumulation, as I'll just reiterate, it wasn't as clear early on for the masses, and I think it's still not as clear. We still see all of this technical jargon around why the market is wrong, it's overbought, it needs to collapse, yet the price is the only thing that matters. The price continues up. And the majority of the fear has been happening all the way up, and they basically missed out on that run. And I think that's probably why they're still fearful, and they're going to continue to miss out on the run. You just see this thing continue to skyrocket over the longer term. Yes, there's going to be corrections. I think you guys get that now. But that would be a main reason why you'd probably still see this thing run, because there is so much money sitting on the sidelines. I think I had a chart for that. Yeah, here we are. Money market funds, assets under management, 6.1 trillion, new all-time highs. Take this reading from wherever you want to take it. The main thing is it's at new all-time highs. So the markets are hitting new all-time highs. And it's circled 2 points here. 2009, 2020, they are essentially the bottoms of the stock market. And then you saw this correction. So more money came out of the money market and was going into the stock markets, potentially going into the stock markets, but essentially money came out of those money market funds. And then you had a sideways period for quite some time. Again, in 2020 through to 2023, again, roughly a sideways period, and then the breakout. So more money started to flow into the money market funds on the way up. Many would point to this to say, well, isn't this going to lead to a collapse? Well, I guess it's more than a probably. It's a definite. There is always going to be a collapse, but trying to pick when exactly that collapse is probably not the greatest game to play when the markets go up. Roughly 14 years out of those 18 years in that cycle, and you have those significant corrections that last a couple of years, but when we're looking at the real estate and economic cycle, they last for a little longer. So this, yes, could continue up, and then you start to see a bit of a peak. You see the money run out of it or money flood back into it when you're in a collapse, whereas this time we're not in a collapse. The markets have gone up and the money markets have gone up. You can see there 2007 was the peak for the stock markets, and you can see money flowing into the money markets as the market is declining, as the stock market's declining. This time around, more money flowing into the money markets and the stock markets continue up as well. So it might be a matter of time until this starts to fall down. You get that final squeeze on the stock market, and then it comes down as more people put their money into the stock market because they've been waiting on the sidelines for too damn long, not getting the returns that the market is throwing at them. Just to finish up on this one here, I think we're in for a quarter 4 party time, similar to what we had in 2020. So we had that, there's a correction. I'm not looking for it to be this big, but even if there is some sort of correction over the coming months leading into that election, September, October, as we've pointed out, maybe you get that pullback. We'll wait and see. And then you start to see the market head out, the S&P. That would be the party time again for the rest of the stock markets, Bitcoin, cryptocurrencies, you name it, we got party time. Now, quick mention on this, forget the name, don't look at the name. I'm seeing more and more of this, and I wanted to share it with you because this is part of my market sentiment reading. When I get these sort of comments and I see more and more of them pop up, 100% get ready for a bear market, it's over. The story is over. You've had the peak, you had your chance, and it's all down. Because yes, cryptocurrencies are near this sort of death feeling, even though it's not showing up on the fear and greed index, but the prices of cryptocurrencies, many of them are down 40, 50, sometimes even 70, close to 80%. It definitely feels like the game is over. But from my experience, and I've got Solana as an experience here, going back to 2020, this is why I think this is the second coming, the second chance. You've got these significant pullbacks, and if everything I've talked about earlier in this video, and of course the previous videos on the channel, that's why I suggest subscribe, like the content, follow along on the free report that you can find a link to in the description down below. If everything there continues to follow through in the markets, then I think it's only a matter of time until we see this move to the upside. And what's getting a lot of investors, and I say that lightly, what's getting them at the moment is the continuous downside. They didn't worry so much about it when the market is pumping and everyone's making 20x gains and all these sort of gains, but on the downside, they really cannot stomach the losses of 70 or 80%. That's part and parcel of cryptocurrencies, especially cryptos that do boom quite hard. You'll see them come down pretty significantly. And in this case, well, the case of Solana in 2020, it came down nearly 80% from its peak at $5 down to $1. And then before you know it, takes off. So that's why I'm still focused on these time frames that I've given you in the previous video. I'll leave a link to that at the end of this video. Around July, you can see here, mid-July, which is only 4 weeks away, 3 to 4 weeks. And then sometime in early August, we might start to see some sort of movement here for Bitcoin to test some higher prices. Now, as more data comes out, we'll be able to narrow in on that particular time frame. For now, I am looking at that July-August period for Bitcoin, so Q3 for BTC, not for cryptos yet. I think that comes later in Q4, so keep a lookout for that. This has still been working out. The higher lows look to be forming on strong altcoins, as I suggested 2 months ago. And what happens from that point, strong altcoins continue to hold their lows. If they hold these levels, they will be the first to break out into new fresh highs and or all-time highs in the second half of 2024. So what I see right now is that second chance to get in on the strong stuff. What are the strong cryptocurrencies? I've talked about it plenty of times. Things that are above their 50% levels, that are above key support levels that they have put in over the last few months, in particularly this April low, and worst case scenario, somewhere around that January low, but make sure it doesn't go into the previous accumulation range before that breakout. That would look like a very weak altcoin. Many of those weaker altcoins have done that. Here is Matic as an example. I'm looking at it against BTC. If you want to check it out against USD, it's broken down from that April low, and this was the accumulation in October before it had its move from 50 cents to $1.30. But it's back down here. It's hit the 50 cents again. So it's not a very strong chart at all. We could spend all day on looking at some of the weaker stuff, but you can take a screenshot of anything here and see if it stacks up to anything that you're looking at. That is my weak list. And then I've got some stronger stuff up here that I've been scrolling through on previous videos. Solana is definitely one of those. And one I looked at this morning, you got Pendle still holding above its 50% and having a reasonable weekly close here back above the 50% at $5.60. So in terms of a time frame for alts, I want to see how it goes through into the election. So, September, October, whether we do get that correction on the S&P 500 in those couple of months there, leading into the election. I think if that's the case, it might be a little bit tough for Bitcoin and cryptos to also pump from that point. But I think by that stage, we'll be able to see where Bitcoin is holding out and what happens next after that election, which I think, based on what I'm currently seeing, is going to be that party time, especially those good vibe feelings, those feelings in the jellies towards the end of the year. No matter which president is elected, I think you're going to be feeling some good times in the jellies. And on that note, happy Father's Day to all of you guys who are celebrating Father's Day this year in the US and the UK. For us in Australia, it comes in September. So enjoy those good feelings in your jellies. I hope you had a fantastic weekend, and I'll see you back at the next video. Don't miss this second opportunity to get positioned into those strong alts, rotate out of the weaker alts so that you're ready to go and you enjoy all the best feelings that are to come later in the year. Have patience. It's happened before. We got there in the end. And Solana, I think, is a great one. If you don't have the belief, have a look back at some of these charts that did drop 80% over the course of 4 to 6 months. You guys know that that number, where we get that from, and then how they have boomed from that time. And that boom can last quite some time. Looking at these lows to those peaks, just short of 12 months, with a couple of considerable declines in between. But you got to risk it for the biscuit. So if you're not willing to go through a couple of significant declines, well, probably the wrong game for you. Anyway, like and subscribe. Links in the top of the video description. TIA Premium is the place to be for trading and investing. I'll see you guys at the next video. Until then, take care and peace out.